Alrighty. So what we're now encouraged to do, and we've been given a heads up for 5 years in the future where every house will be like this at least, is to have 3 participants in a building and still have the on-site overnight assistance, but also have 2 living areas instead of just 1. So that means we're building a bigger house. If it's a bigger house, it's going to cost more money. And apart from the additional building cost, it may also require a bigger block of land. So once upon a time, we might have been able to build these houses on 300 to 350 square metre blocks of land. But now we're going to need a bigger block of land in many cases, especially around Melbourne Metro, any of the metropolitan areas, Sydney, etc., where they're building 3-story apartments on a postage stamp in Sydney. We do need a bigger block of land, so the cost of the block of land is going to be more expensive. If it's in the regional areas where we've been investing, Sandu's running around and getting us giant blocks of land anyway, are really relevant because most of those blocks of land are bigger than in the country than the minimum size that we require anyway. So it may not be too bad there. But it means that there's anywhere from $55,000 to $90,000 of additional cost on the build. And if we're in Melbourne Metro, the cost of a bigger block of land can be around $100,000. So Matt bargained today of a bigger block of land for only $10,000 more. But typically people would need to be budgeting for up to $100,000 to get these bigger houses to fit these days. The additional income of the extra participant is going to be, if we look at the worst case scenario, we can put a supported independent living person in there who's doesn't have the full NDIS funding but still needs somewhere to live. That's about another $11,000 worth of income to the investor. Or if it's another NDIS approved person, another $40,000 or so. So there's more bedrooms, more people, more income. So we're going to be making more income. And at least the NDIS providers are happy that they've got a house that they can use for the next 20 years because typically people don't move out of these houses at all. Since we started, we've had a dozen more people join. I just want to ask again what questions people may have, and I'm happy to answer them up front as well.
Joe,
Yeah.
For insurance, like I know I've had the question answered. Like you're getting robust people. Some of them are can even be malicious. It's just doesn't make sense that we just take out normal building insurance, like normal house insurance, but apparently that's the case, hey? Is there and I know you recommend a really good one. And you've touched on that already. Yeah. Is there anything else? Like, do you have to go through special NDIS insurance brokers, or can you just go through UE or whatever?
No. There's basically 4 companies or 4 insurance companies that'll do it. And I'm just going to get a list of them up now. Or I was looking for the list. I probably don't have it on my laptop. I definitely don't have it on my laptop.
And UE is not one of them.
Yeah, that's right. So I've got some of the insurance policies here from my clients. So We've got QBE, we've got CGU, and we've got Allianz. So I keep a copy of people's insurances for my own information. We on my desktop, I'll have the copy of the insurances. Answer the question, and I'll just email it out to everybody. We can get quotes from 4 different places. There's no point you ringing up those places because you're just going to get some telemarketing person who's going to step through the standard questions, and they're not really going to give you the best options. You need to go through the broker, and the broker is one particular person that's doing it all day, every day. They're based in Shepparton, and sort of, we give you all his details as well. Just let him go and do it for you. So those insurance policies are going to cost around $3,500 to $4,500, depending on the location as to where you are. You mentioned robust people and malicious damage. So, technically you don't need insurance on the house because the NDIS provider is going to have insurance on the house, but you'd be nuts not to have the full range of insurance on your own house. Because if anything goes wrong, the insurance companies don't go, oh, that's bad luck, here's a blank check. They're going to argue and try and weasel their way out of payment. So what we would do is recommend that everybody, no matter what sort of participants they've got in the house, get malicious damage as an option, because you've got carers coming and going to the house, you've got drivers, you've got delivery people, you've got friends and relatives of the participants coming and going to the house as well. And so, number one, if we've got a crazy person in the house, half the time they're crazy is because of their family. So if their family are coming to visit them, and there's some sort of an argument, we definitely want the malicious damage to the house, which normal everyday landlord's insurance does not cover. And we also, very importantly, want uninvited guest as well, because we basically don't even have the time to keep track of who might turn up and say hello to their brother, sister, uncle, etc. The workers in and out of the house are very regulated, though, and they have to be approved to come in and out of the house. So that's something that's very much under control. But the insurance is a whole lot more expensive than your typical everyday landlord's insurance. I used to just send out the list of the insurance companies and what to ask for, but people would sometimes, just get some random helper on the phone that just stepped them through the standard questions, and they didn't end up getting what they needed. So we've just said, just talk to the broker. He'll do all the work anyway, because otherwise you're sitting on the phone for half an hour, just trying to get a quote, and the guys on the phone, can't even spell NDIS in half the case either. And if you ring up insurance companies, half the time they say they don't even do it, when we've obviously got insurance policies for, for other clients that do have it. So it should be really simple. It's not really simple. So that's why we just had to funnel you all to one particular guy that's doing it all day, every day, and getting it all done for us as well.
But he specializes in NDIS robust housing, does he? Or
everything to do with NDIS. Correct.
Yeah.
Robust or not. Yeah. Yep. So that's already happening. People already have it, and money well spent. I won't bother about looking at the moment because I've had a look, but it would have been emailed out to people. If you give me 1 sec, I might just have a look too, because it's.
I don't think I've seen that guy's contact details.
Now, just give me 1 sec. It should be pretty easy to have a look because I send it out all the time to people.
Thanks.
Yeah, the let me just see if you can see the screen. Can you see that little email there? There's just got 3 of the insurance policies on it.
Yep.
Yeah, okay. So the CGU, QBE, like I said, the let the mortgage brokers work that out. You can see a range of quotes there. Depending on the location, it's going to be a bit more than that typically. So don't be surprised if it's up to $3,500, $4,000 once it gets done properly. Okay, so this was the initial, and then we'll have all the contact details of the broker there for people as well. Alrighty, questions, guys?
Have you ever run into trouble with bad soil on a block of land where it is a risk of the house cracking and costing a fortune to repair, or experienced it happening?
The simple answer is no, never, at all. But you've also got to understand that builders that we're dealing with are limited, very limited. The NDIS providers are only going to deal with builders that they're happy with, as well. And the only builders that we've used have had a track record in this as well. But NDIS is really, we've only been doing it, I shouldn't say only, we've been doing it for an enormous period of time, which is nearly 5 years. But nothing's going to crack in 5 years anyway. So, and the NDIS houses have to be, built right down to the last millimeter, and especially robust, and those sort of houses and high physical support need to be indestructible anyway, which is basically all we've been selling. So no, we've never had any problems with the quality of the workmanship at all. Remembering it's costing twice as much to build these houses as a normal everyday house anyway. So spending money to get something right is not an issue with any of these things, because we're not dealing with first home buyers. We're not dealing with investors that are just trying to buy the cheapest property on the market to maximize their returns on a normal everyday cut down investment property. So it's a completely different market where we're spending twice the money to make sure something's millimeter perfect for the clients to generate the huge incomes that we've got. So we don't need to be too petty about the amount of money that we're spending on these things at all. They're getting built right.
By law, they have to engineer and do soil tests, and if the soil is a certain type of soil, they have to build the house to accommodate that soil, right? Like special foundations or whatever. Anyway, by law,
That's right.
that's just council law, council regulations. Am I right on that?
Correct. Yep.
Yeah.
So it's all pretty straightforward. Where we get our own land, or people give us land, we've got to do the soil tests first, so the builder can put the appropriate slab on it as well. So I have thousands of dollars worth of invoices from soil tests to make sure we're building the right stuff. So, I'd also like to say that in that 5 years that we've been doing that, we've done a really good job. And that gets brought up all the time. And especially with the Royal Commission, because they're saying that, a category of house might get ruled out over time. And in the last few years, we've typically been selling the high physical support houses and the robust houses. High physical support mainly because haven't really been worthwhile to buy the robust houses until very recently. So that's where the demand is. That covers all categories. The income that we get for improved livability has more than doubled in the last year, so we've been on the right track there. I've been having a chat with SDA providers over the last couple of days, and they're telling me that in Western Australia, there's more houses being built at the moment than what will be needed in 20 years from now. So we have not recommended one house in Western Australia because we haven't had a NDIS provider that can support the participants in those houses. They don't have the staff over there, and therefore we're not going to recommend it because you might build the best house in the world, but if there's nobody to get up at 3 o'clock in the morning and wipe the participants' backsides, then it's a pointless exercise. So that's become very, very relevant with lots of whinging customers that told me I was $30,000 too expensive on a house, building something in Western Australia and not having participants there for a year, and will never have participants in that house. Also, when we were running around Queensland looking at what areas to invest in, we were explaining to builders in the early days what NDIS was, and we're in one particular area, and we worked out that there was 12 houses that we could build and fully occupy. So we built 6 houses, but the builder thought, shit, this is a great idea, and he's built 120 houses. In an area where there's a demand for 12 houses, a builder's made a fortune from investors that are never going to have a participant in that house. So once again, we were right on the money. And because remember that we're working for you, the investor. Okay. We're not working for the builder. We're not working for the finance company. We're not working for the land developer. We're not even charging you any money to run through all this nightmare of so many pieces in the puzzle to put it all together for you. We're just assuming that next year, when you have nearly doubled your money on immediate capital growth and you've got money coming into your bank account, that you'll buy another property from us, and we'll make a little bit of money each year when you do that, rather than just trying to load up on day one and then never being able to talk to you again because you can't get a participant and you're not getting any money out of that house. So that's been proven more and more with clients and what other idiot marketing companies are doing. I was at a Lunar New Year festival last night with another marketing company that work with us as well. And, I was talking to one of the builders there, and the builder's telling me how excited he is about being able to build a smaller NDIS house this year, which is going to be cheaper. Now, that's the exact opposite of what the Royal Commission has said and what our NDIS providers have told us what to do. So dealing directly with a builder who has no idea about anything, okay, and believing them is just the stupidest thing you can do. I have lots of people ringing me, begging me, crying to get participants for them, because I spoke to them 2 years ago, 3 years ago. They went off, and the most more expensive we've been than anybody else on any sort of a house is about $30,000 Australia wide, which is nothing. It's God knows, not even a 5% difference. We've always had leases for clients. Okay. They've just gone to save $30,000 and they've had a vacant house for 1 year, 2 year. So it's just insanity. And it's just stupidity. and I'm sick of being right. I can still run for Pope. And I do want to reinforce that to all you guys. You know, what people have bought from us before COVID, they've all made a couple of $100,000. In a lot of cases, we would even tell them to think about selling those houses, because you know they've made the capital growth. In a lot of cases, if they're normal everyday investment properties, the interest rates have gone so much higher that they're way negatively geared. Thanks to the idiot chairman of the Reserve Bank who told us there were going to be no interest rate rises, you know, in the foreseeable future, and then put up interest rates 10 times. So you know that's caused a bit of pain and suffering. So yeah, definitely consider selling. We're actively marketing to people with apartments in Melbourne to tell them to sell them, because they're never going to make any capital growth. I think we've sold one apartment, you know, while we've been working, and that was in a super fund, and that was a bargain, and that made money as well. But the average apartment in Australia never makes any money. And in Melbourne, they're all about 10% less than what they were before COVID, instead of the opposite. So we're just telling people, get rid of those non-performing assets, put the money into NDIS. You'll make up for the money that you've been bleeding over the last couple of years. Just put your money where it's working. So in 20 years of doing this job, I've never told anybody to sell anything, except for the last couple of months, when it's become enormously obvious that you shouldn't have your money tied up going nowhere, especially with interest rates, the tenancy laws that you have these days, where you know people's cats can be, you know, just living in your sink and you know, just destroying your house, and you can't even kick them out of your house. So you're a lot better off with something like NDIS, you know, let alone the fact that you're getting 5 to 10 times the amount of rent, and you're getting an immediate huge capital growth on those properties as well. I've talked about capital growth a couple of times. There's a few new people here. So I might just flip over to the immediate capital growth side of things, just to understand why I'm saying that I'm expecting you to come and have a chat to us next year and buy another property. So if we look at, Lawrence, can you see this spreadsheet?
Yes.
Yep.
Yeah. All right, guys. So if we look at an example of a $900,000 house next to Sandu, income, there's about a bit over $180,000 a year, based on a commercial valuation. All right, that house is worth $1.8 million. Now, we're paying about $950,000 for that these days, because, like we've just been saying, NDIS wants a bigger house, so it's going to cost us about that. Once it's built and there's money coming into the bank account, we can go to any lender, basically any commercial lender, any of the big four banks, and say, here's my lease for 20 years. Here's the money going into the bank account. I want to refinance it based on the income. It's worth, like we said, $1.8 million. Even if you only borrowed 60%, you've got all your deposit back. You've got an extra $166,000 for a new Land Cruiser. I'd tell you not to buy the Land Cruiser and to come and, you know, put a deposit on 2 more NDIS properties. But it's the theory. We don't usually tell people this on day one, because they get all too excited, or they get greedy, or they don't sleep at night, wondering what they're going to do with all their money. But this is what's been happening. We've been doing it for nearly 5 years now. I've had customers refinance and buy 3 properties or 4 properties after they got their first one up and running and their income running. So that's the theory. 7% and 8% are shown on the spreadsheet because if it's in the regional areas, we've got a lender that'll give you refinance based on an 8% cap rate. And if it's in the metropolitan area, we've got that same lender will give you a loan based on a 7% cap rate. So what you paid $950,000 for, based on $186,000 worth of income, is worth over $2.6 million. So refinance that, get yourself an extra $600 and something thousand in your bank account. If you don't want to buy a second-hand Lamborghini, come and buy a couple of more NDIS properties from us, and set yourself up for the best retirement ever. Pay your own house off enormously faster. Put your kids through any school in the world, and have a wonderful life. So we're getting all our capital growth in the first year or two because the capital growth is based on the income that's being generated. The income only goes up based on inflation. All right, so the NDIS is going to increase your rent for the next 20 years based on the rate of inflation. So, the house is not going to really double in the next 10 years because it's already doubled or more in the first year or two after completion. So we're getting immediate capital growth. That means you can go out and buy another one. Year after that, come buy another one, etc. Any questions on that?
Well, if no one else has one, I have one.
Yep, fire away.
Yeah, interesting what you say about Perth. That's crazy. And it seems to be the flavour of the month for investors all over Australia because it's cheap and booming. It is a major con in buying a SDA property in it where the land is cheap, because logically investors are going to go and build SDA homes there, and they're going to get those areas are going to get oversaturated, like Brizzy, where the land's expensive. Perhaps the SDA homes won't be built. Is that, I guess, oversaturation is going to happen at one point. Any thoughts or comments?
Yeah, it's already oversaturated. All right. So what I did was, unfortunately, we got a couple of customers or people that just, went and bought something cheaper. All right. In Western Australia. So, and that's why I brought up the topic, because they're having a whinge to me that they can't even get an NDIS provider or an SDA provider to rent their house. Okay. So I just went off and got a bit of information. This is a report that you can probably see about demand projections. And when you flip through this report, which I can email to everybody as well, it just tells you what's going on in different areas. And it also tells you the areas of greatest demand over the next few years. So if we zip down, I'm pretty sure it was towards the end, we can see what the absolute growth is going to be. It's growth in all areas, but if you look at anyway, I might just send it out because you can have a look at it at your own leisure, but it also tells us where the greatest demand is if I get to that page percentage-wise. And the greatest demand, okay, depending on the areas over the next 20 years, we've got Brisbane inner city. Now, the cost of land anywhere in a city just doesn't make it, a smart investment for most people. So
yeah.
So if we have a look at where the greatest demand is, we've got the western suburbs of Melbourne. So that's places like Melton, effectively, Werribee, etc. Huge. It's whatever 150% increase. The southeastern suburbs around Melbourne, anything in there, there's always demand. Gold Coast, that makes sense, because if you were an NDIS person and you could live anywhere in the world that you wanted to live, and have your rent paid for by the government, it would probably be somewhere nice and sunny. with lots of activities and healthy lifestyle. Certain section of Perth, okay, but not out in the new suburbs where there's, there's no buses, there's no staff to look after you. Obviously, Sydney, Melbourne, etc. as well. So when you look at the demand in Perth, it's way below just about or most of those other areas where we can be investing around Melbourne anyway. And there's a bit more of an explanation as to what's going on in the different areas with the relative numbers as well. But it's important this exercise. So there's another document that explains how many houses are already being built underway. So I'll probably have that ready for next week, just to prove where not to invest. But for us, it's really, really simple. Anyway, if we can't get a lease from an NDIS provider, we're just not going to recommend the area. So there are no leases for properties in Western Australia anyway. So it just counts it out in 3 seconds flat. And yeah, it's really, really simple. So we're trying to be as close to hospitals as we possibly can, healthcare precincts, etc. But the good thing about NDIS is everything to do with it is documented. All right, you don't have to believe a word that I say. I've been patting my own back for a fair portion of this to say that we were right. And that's good to know because people have made enormous amount of money. They've made hundreds of thousands of dollars based on the theory. The theory is now practice. The money's going into the bank account. Houses are built. I've done some videos of completed houses. I've posted them as well. So you should be able to see them. If you don't look at Facebook, which I don't, then I can email them out to you as well so you get a good look at what your money's buying. But yeah, all the documentation there's, all the proof is there as well. So, and I'll have a little bit more for next week. Let's have a look. All right. Any other questions? And then I'll just run into the presentation to give a bit of an overview, which
Joe,
might
can you show the calculator working?
Yep. Let's have a look at the SDA calculator. I'll just share that. Let's have a look. All right, so the government, this is what I'm saying. Believe a word Lawrence says. All right, don't believe a word I say. Everything to do with NDIS is fully documented. It's on the NDIS website. You just need to search for it on Google. It'll come up. I can email it to you to save you dicking around with thousands of pages on NDIS. But the number one area of demand at the moment is around the Mildura area and Renmark, South Australia, which is really just serviced from Mildura anyway. So in the regional areas, we love the regional areas because the blocks of land are half the price of what they are in Melbourne, and the rent's about the same. So if we're going for high percentage rental returns, 25%, something like that, 20-25%, we want to be buying in a regional area. And you've also got less competition. For a lot harder to build up there, we actually have to build half a dozen at a time, not just one at a time, but to make it worthwhile for the builder as well. So when you look at an area like that, anything to do with purple is typically directly from the NDIS. So one of our number one areas, like I just said, was Renmark, about an hour out of Mildura. I've personally bought one of these build to rent places in Renmark, and the there's a couple of reasons for that. One is that there's only half a dozen blocks of land there, unless Sandu gets off his backside and gets us some more. But I'm pretty sure that there's nothing going to be titled for another year or two. And there's a huge demand from participants. So one of our favourite NDIS providers who gives us the 20-year lease has been begging for us on behalf of their participants to get our investors to invest in this particular area. So, like I said before, always high physical support we're building, because we can put a fully accessible person there who's wheelchair bound but can look after themselves, or an improved livability person there who might only be slightly disabled, can look after themselves as well. We always have the on-site overnight assistance, so that the carers can provide 24-hour care and sleep there. These days, we're always putting in fire sprinklers with these properties. So if we look, so there's a little drop-down box there. So we can't manipulate these figures. These are directly programmed into the spreadsheet by the NDIS. That's why I'm saying you don't have to believe anything we say. If we look at without fire sprinklers, we're getting about $178,000 a year all up for those two participants in that house. The fire sprinklers are probably going to cost us $30,000 to $40,000, but we're now getting $186,000 a year. So from an investor's point of view, which is how we're looking at this, and I'm sure that you'd care if some fully disabled person can't get out of bed and some little Filipino nurse can't drag him out of bed when the house is on fire. But you're paying an extra $40,000, let's say, to have that installed. You're getting an extra $10,000 a year. So after the fourth year, you're in profit. For the rest of the 16 years, you've made an extra $160,000 just in the lease period, because you put some sprinklers in there. It's definitely worthwhile doing. It's obviously a lot better, a lot safer for the participants, and the government knows that. So it is dangling that carrot in front of us to get us to do what's best for the participant to prevent them being burnt to death in their bed.
Do the cocoon ones have the sprinklers, Joe?
Sorry?
Do the cocoon ones have sprinklers too?
A lot of the robust houses will not have sprinklers in them. One reason is because a robust person is not bedridden, right? They can get out of the bed and they can jump through, they can open the door and, run out of the house should anything happen. So they're able-bodied. The other point with robust people is that if there's somebody that is depressed in that house, then they can hang themselves from the sprinkler nozzle in the roof. So very often the NDIS providers do not put the sprinklers in the houses to stop them hanging themselves. The other thing they do these days is actually build higher ceiling in these houses. So the ceilings these days is now 3 meters in that house. So if they do have sprinklers, then it's virtually impossible for them to hook up the sprinklers and to get their necktie up there and hang themselves. So
yeah, because if they're a hybrid house, if it's a hybrid house, which can be a HPS as well,
correct.
And a robust, maybe those hybrid ones have to have sprinklers. Did you think, or?
Yeah, they do, and we do put them in, and they're the high ceiling ones.
Yeah, right.
Yeah. Yep. And then they're also a bit more careful about who goes into that house as well.
Yeah.
All right. So by changing the location, building in, let's say we just go to Melbourne Southeast, all right, which would be Cranbourne, Clyde North, that sort of thing. Oh, we're getting about the same rent. Yep. If that refreshed properly, let me just go to Bendigo. Yep. All right, so go to Melbourne Southeast. Hang on, I'll just go to Melbourne Southeast because the price of blocks of land around the southeast of Melbourne is $450,000, $500,000. Okay, but we're getting the same rental return, $186,000, as what we're doing for going off to South Australia, where the block of land is $200,000. All right, so we're going to be a lot better off as an investor to be buying in South Australia than what we are in Cranbourne or Clyde. Obviously, there's a huge demand in that area as well, like we saw from the increase in the top 10 areas of increase in Australia. So that's all automatically adjusted to let you know what sort of income's coming in, and that's from your typical build to rent. So very simple theory. You get the rent. The NDIS providers will take anything from, the SDA provider, which are the people that look after the house. The NDIS provider are the ones that look after the people. So the SDA provider, the property manager, is going to be taking anywhere from 10 to 15% of that income as their management fee. Alrighty, so that's all very straightforward. Gets updated once a year. The rent goes up based on inflation. You can see when that house got finished. Did it get finished before the price increase on the 1st of July, or did it get finished after? So we know in legislation what our rent's going to be as well. So I'll just sit back to the presentation and flip through that. A lot of you would have sat through this already, but I'll just run through it to prompt anything else that we need to touch on. Once again today, I've talked to investors whose mortgage broker said they couldn't get finance on NDIS houses. So you need to talk to our mortgage brokers, all right? Don't bother trying to waste your time, because by the time you talk to your own, and I've had to talk to them, or Lawrence has had to talk to them about, getting educated on NDIS, then, the block of land's been sold to somebody else, the house has been sold to somebody else. So don't even worry about it. We're pretty strict on that these days. You got a huge amount of income that's coming in with these properties. A lot of our customers are going to be putting these things into family trust, unit trust structures as well. So I'm happy to pay for you to chat to one of our accountants who has been doing this for us for a couple of years. Obviously, ask your own accountant because he'll know your circumstances. But like I said, I'm happy for you to get a second opinion on these sort of things. We don't deal with a conveyancer because all they're doing is just ticking some boxes, really. A lawyer, it's more a commercial lease than a normal everyday residential lease. So a lawyer's going to work on your best interest. The conveyancer just ticks a box, and if the box can't get ticked, then he just says can't go ahead. So that's not really any use to you. We need to use somebody that knows about NDIS and is actually working for you. Financial planner, anybody that's over 50 should consider these things in their super funds as well. Not that I said should, but would be worthwhile having a look at them, because anything that we're talking to you about for extra cost, you can put it into your super fund. And that would be a fantastic investment, because once you're over 60 years old and if you're not working full time, then it's all tax free. There is no tax on the income, and there's no tax on capital gain should you sell it. So, that would be wonderful. Even if you have one of these things in super, to be getting $3,000, $4,000 a week tax free, it's a pretty good life in retirement. We've all heard about NDIS, but it is relatively new. It came into legislation 2016. The first couple of years there was a whole lot of public servants hired to write the rules and regulations. Then we sort of started seriously looking at it in 2018. trying to get finance from the banks, they sort of had not much of an idea about it because it wasn't a normal residential house and it wasn't really a straight commercial investment either, because it looked like a residential house. So for a while, the banks were giving us loans. After a while, they decided, why are they lending us all this money for an NDIS house when every other 4-bedroom house in the street was only $300,000, and our house was $600,000. So if you go to a normal bank, yes, you can still get a loan from them, but it's going to be the price for a normal everyday 4-bedroom house and not an NDIS house. There's a video which shows you what the houses look like, and that also helps explain why it costs you more money. I've got a better video that we went and had a look at a couple of completed houses, so you can see where your money's gone, and it makes perfect sense when you actually have a look at what you're getting for your money, and what a bargain it is, compared to the rent that you're getting. This presentation was done more than 4 years ago, and I haven't updated it. One, to just prove that what we were telling you way back then was correct, and obviously it's based on us studying the NDIS and making these investments based on what the government wanted us to do. So it's all worked out fantastically. There's a shortage. All right. In 2008, when they were thinking about what was to later become NDIS, government thought maybe 28,000 people would require specialist disability accommodation funding. But even before COVID, the actual numbers were over 120,000 people. So government underestimated again. Obviously, that's sort of a common theme, budget blowouts, etc. So we know that there's a huge demand. And then COVID came along, and COVID was really fantastic for NDIS because all these people living in nursing homes had to move out of the nursing homes because all the disabled people had to move out because there were so many people dropping dead in nursing homes. Not quite fortunately, but where did they go? They all went into hotels because the hotels were all vacant because there was no travel allowed, because we were all locked down and nobody was allowed to come to the country. Will the waiting list go down? I'm not sure if we just had this discussion, but you can also see on the government website what areas are increasing as well in demand. Oh yeah, we did touch on that when I was showing the fact that there's an oversupply in Western Australia, because it shows you in that report what the areas of demand are, what categories are increasing as well. So yeah, it shows that it's actually not going down, it's just increasing. And then when we first started doing this, we were terrified that the government was going to turn it all off because it was really just an election promise by the Labor government. Once the Liberals got in, they actually increased the budget for NDIS. So we thought, oh, that's all right. We can promote it a little bit more. And then last financial year, the rent for an improved livability person went from $23,000 a year to $70,000 a year. And that's when people started ringing us because they worked out, well, the government's definitely not going to turn it off if they've just, tripled the rent that they're getting out of their houses. So it's, and in the budget review that was also done in December, probably a lot of people would have heard the Treasurer up there saying that for every dollar that they spend on NDIS, they get $2.20 back in the economy. So the more they spend, the more it stimulates work. When we're building an NDIS house, it's going to create at least 10 more jobs in the economy. The most obvious one is 24-hour care for 2 participants. Apart from the carers, 24 hours a day, 7 days a week, you're going to need bus drivers, you need a plan manager, you need other staff at the NDIS provider. You need a real estate agent to run around and find the land for them. You need builders, etc., etc. So the government's making an enormous amount of money out of every house that you guys put together. When we first started this, we used to run around the country looking at what areas were going to have good capital growth, because we were old school thinking, where we've always made our money on property investment by capital growth. As you now know, that is completely irrelevant with NDIS, because we're manufacturing the capital growth based on the income that these properties generate in the first year. So completely irrelevant, complete waste of my time driving up and down to Mildura every couple of weeks, because the NDIS providers now come to us and tell us where they want us to build. We'll have a look at the mathematics. As long as the mathematics works okay for our customers, then we can recommend it to our customers. And however, all the proof is there. So if I just click on that link, that'll take us off to the government. Whoops, the resource has moved. Okay, well, that's brilliant. So maybe after 4 years, maybe I should update it. Alrighty. So it tells us we can put in a postcode. I might actually just, I'll come back to it if we want to do it later. But what that is the demand map. If you guys get onto Google, all right, in NDIS demand map, it's going to take you to this page. You put in a postcode, all right, and it'll show you what the demand is in that particular area. There's a little slider on the left-hand side up that says last financial year, and then slide that and it'll tell you next financial year. So we want to be investing in an area where the demand is increasing, and that's most areas. And then you'll go down the page a bit and it'll tell you what areas are increasing in demand and how much money the government is spending. And I can guarantee you'll be all surprised about how much money is getting spent in your area on NDIS. Okay. These people that are living in your house really don't move out. They're typically there for life. They are very, 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 very happy and grateful to be living in a brand new house that's been custom designed for them. The only people more grateful than them are their family and maybe you, when a couple of $1,000s a week goes into your bank account. But it is a wonderful win-win-win-win-win situation for everybody that's involved in NDIS. The NDIS carers get a job at more pay than what they've usually been on before. The investors are getting 5 to 10 times the income that they would otherwise be getting for the same value house. The participants living in a fantastic new house with wonderful technology, facilities, quality of life. Their family, the pressure's off them. The government's making money, as we mentioned, but the other factor is that the government, and therefore you as a taxpayer, is also saving money, because it's costing anywhere from $13,000 to $20,000 a week to keep these people in hospital. Whereas, you think, oh, I've hit the jackpot, I'm getting $3,500 a week in rent. Well, the government's laughing because they're saving $20,000 a week per person. So they're saving anywhere from $26,000 to $40,000 a year in accommodation costs having people in hospital, and they're only giving you $3,500, $4,000. It's win-win-win all the way around. There's 4 different categories. The robust houses, we typically didn't build any of those because they were costing the same to build as what a high physical support house was, but we usually only could put one robust person in one of those houses if they had bad behavior. A lot of times we can put 2 robust people in there because they might actually only be depressed. So, they're never going to get off the couch and, kick or punch anything. So, it's with a profit share arrangement. That's a fantastic investment these days. High physical support. We get $80,000 a room, fully accessible 70,000, or actually mid 70s, and improved livability about 70. So none of our investors really care whether they get high physical or improved livability. It's still an astronomical income that we're getting. And like we said, these people typically don't move out. We know, everybody knows it's twice as much to build these houses. They have to be indestructible. There's a lot more fixtures, fittings, higher ceilings like we just mentioned now, bigger houses, etc. The time used to take a whole lot longer. The builders these days are zipping along, and most of them are all the houses have to be finished within 12 months. So the NDIS providers are typically limiting the amount of houses a builder can build, because they don't want the builder to be overloaded and not complete a house within 12 months. If it takes longer to complete a house than 12 months, then the participants' approval for finance has expired. So the NDIS provider's plan manager, who they're hiring, paying money to, has got to go do that approval for finance all over again, which can take another 6 months, another 12 months to be approved. And so not satisfactory at all. And so therefore the builder has to agree to get these things done within 12 months so that the participant can move in and their finance is still there. There's a limit. There's another limitation to NDIS. It's a very limited opportunity. It's limited as to how many houses the builder can build. It's limited to how many staff an NDIS provider can hire to manage this house. If we've just mentioned that there's 10 new jobs for every new house that goes up, and we're building 5 new houses in Renmark, that's 50 new staff that the NDIS provider has to find. Any of you guys want to get up at 3 o'clock in the morning and shower somebody, feed them, give them their medicine? Not me. Okay. The land, has to be appropriate land. Can't be any block of land. All right. A lot of criteria on the land and where that is. Size of the land, slope of the land, etc. Obviously as close to a hospital as possible. There's no point building them out in a new suburb in Western Australia where there's no buses, no hospitals, no staff as well. So very, very limited opportunity. And of course, once there's a dozen houses maybe in a suburb, well, there's no point putting a 13th house in that suburb if all the participants are already living somewhere, because they're not going to move out. All right. The house has been custom designed to them. It's taken them a month to, even do all the paperwork to get move in. The NDIS provider is not going to move them around willy-nilly because, this house has got a bigger TV in it or not. They're going to be staying firmly in that house for a very, very, very long time. Very limited opportunity, first mover opportunity. People are in, they don't move, but we can only put a certain amount of houses in any particular area. The council doesn't let us to put more than a certain amount of houses in any area either. Neither do estate managers, and neither does the NDIS. So it's not unlimited opportunity. You don't have months to decide, yes, I'll do it, no, I won't. We've already mentioned that the prices today are $55,000 to $90,000 more than what they were in December. And that's just 1 month. And prices don't go down, anything to do with real estate. All right. Once upon a time, we were also worried about participants. That's another complete irrelevancy because of the wonderful NDIS providers that we have that are giving us the leases. Even if somebody does get put back into hospital, dies, the government's still paying us for the next 3 months while the NDIS provider goes and finds somebody else to move into that property. So not really an issue for us anymore, thank goodness. We talk through the calculator. The calculator shows us the rent. We also get another couple of incomes as well, which is these days that's gone up to about 11,000 a participant. We can do cash flow analysis for you based on a worst case scenario, best case scenario. Once we know what interest rates the banks will loan you through our mortgage broker, what the cost of insurance is for that particular area. We can tell you exactly how much money is going to go into your bank on a weekly basis. And that's just nice to know, because then you can have some sleepless nights working out what you're going to do with all the money as well. Different NDIS providers have different leases as well. And, 20 years, 30 years. So they're all up front. So you can see the lease before you sign up, spend any money. There's no worry about having participants with what we've organised for you already. Etc. A few of you on the phone call I haven't met before, so I don't know anything about your personal financial circumstances. But one of our guys will you personally to work out what your goals are. I can tell you that a lot of people are putting their children through the best schools. They're looking forward to a retirement that they never could have dreamed of with this sort of money. They're paying off their house in a couple of years, which they thought that they would take them 20 years to do. And, they can replace the income, their income, in just one transaction. So it's very exciting opportunity. It's just got better and better as time has gone by. All us guys at Capital keep hearing it's all too good to be true. And, some of those people, if I dropped $50 in, left it on their table, they complain that I didn't drop $100 on their table. It's an unbeatable investment. All right. There is no better investment anywhere in the world. Okay. I'm off to Vietnam again on Friday, because the amount of money coming out of that country to buy these sort of things is huge. You guys are competing against superannuation funds run by Macquarie Bank, where the minimum number of these houses they've bought is 7 at a time. They're usually buying 10 to 30 of these things at a time. The NDIS providers would much rather deal with Macquarie Bank than me, because I've got 10 different people buying 10 different houses with 10 different solicitors, 10 different finance brokers, etc. Whereas if they deal with Macquarie, they're just dealing with one person. So that's what you're competing against. We are, begging, pleading on your behalf to allow our clients to get in on these, because it makes a big difference to us. It doesn't make any difference to the, Porsche driving, Penfolds drinking brokers at, the millionaire factory Macquarie. And that's the good thing about the NDIS providers. They're not really money focused. They're people focused. And that's a huge, it's both good and bad, because from an investor's point of view, maybe we could make a bit more money out of some of these houses. But the NDIS providers are focused on the welfare of the individual. So they're not in it to make money. They're in there to provide a wonderful quality of life for the people that they're caring for. And that's fortunately extended to us as well as investors, because they know that it makes a huge difference to our life as well. And it's really good of them to allow us to have some of these properties to purchase. And that's all the links. I can update the links as well, since the NDIS website's got the demand map for us anyway. So after having run through that, any questions that's prompted for people? Alrighty. Recording will be available. Just let me know if you want it. I can flip it through. You can fast forward, backwards and forwards, so you don't have to look at my shiny red beetroot of a face any longer than you need to. Or listen to me. The links in there. Any other proof? Everything's documented. Everything's proven. Anything you don't believe, let me know. We'll send it out to you in a documented format as well. Alrighty. Thanks very much, guys. And I just also remember that we do this every 7:30 on a Monday night. So the welcome to bring your friends. Welcome to bring your wife that doesn't believe anything that you're telling her. You know, it's going to be very boring to be sitting at home on $1 million a year after you've got, you know, 4 or 5 of these properties and have nobody to go play golf with. So definitely let your friends know about it. As we have multiple family groups buying these sort of things, multiple friends are buying them together. And it's very, very exciting to see people getting some money and having a decent holiday, you know, that they've always wanted. You know, I'm relatively old these days. I've got a birthday coming up this week. And, you know, the things that you remember the most are, you know, all the fun activities that you've done with the family. The more funds you have, the more fun you can have, the better schools you can send your kids to as well. So trying to generate as much income as possible is definitely a wonderful thing to do. Even if you don't want it, just donate it to somebody. There's no point just sitting on assets that are not performing and saying, well, I don't need the money. But yeah, maybe we don't need the money. Nobody's ever going to starve to death in Australia. But you really want your assets working as hard as what they possibly can. All our clients have got equity in the properties they've bought from us, their own homes. So just use that to do something useful. You know, the amount of donations, charities, things that can use this sort of money is endless. And I see what difference it makes to people's life in the you know, the church groups and things that we sponsor in the Philippines, the amount of money that I donate in Vietnam. It's, you know, you're just making the happiest people in the world from, you know, just a tiny little bit of money in comparison to what we can generate here. You guys should be paying off your mortgage so you're not being bent over by the banks and so stressed out about interest rates. You know, none of our NDIS investors really give a shit about what interest rates are. And I can tell you that half of them don't even know what interest rates are because it's just irrelevant with the amount of money that's coming in from these sort of properties. So, yeah, there's a lot of good that can be done with such a huge amount of funds coming in. Okie doke. All right. Every week we try and do a bit of an update. Next week, what I'll have is I'll have an updated price list from a couple of different NDIS providers about the stock that they want, because most of the builders have come back to work towards the end of January. We've got and then of course we've had to have the plans for bigger houses drawn up and the costing to that. So I should have most of those, or if not all of them, the main ones, by this time next week. And to answer Lawrence's question, yes, then we'll have something for Doug, who's, you know, on the waiting list to buy, you know, one of these properties as well. Alrighty, guys. Thanks very much. Oh, hang on. One more question. Is structure to keep on buying NDIS property? Yeah, really good question. And that's the theory that we've explained to people and what works. So, and that's one reason why we're not charging you any money to do all this. Once the house is completed, once the money's going into your bank account, because you've got money going into the bank account and because you've got a 20-year lease, which I have explained to the other people on the call before, we can actually go to the bank and say, we want to refinance this house. So based on the income that's coming in, commercial lender will, let's have a look. I'm just going to change the share. So a commercial lender will value that house based on the income. So we have touched on this for most of you already. But if we're buying a $950,000 house, we can get a minimum income of about $186,000 a year. So if that were a commercial property, which it is, and an investor is happy to buy it at a 10% return, that property is worth $1.8 million. We have lenders will value that property based on an 8% return if it's in regional areas and a 7% return if it's in metropolitan areas. So just to be ultra conservative, we say to people, even if it's based on a 10% return, Because if you advertise something, a property for sale with a 10% return, it'll sell virtually immediately. So therefore, you've paid $950,000. Once the money's actually going into the bank, it's no good to you trying to sell it as a house and land package and not being built because it's worth $950,000, maybe $1 million. But based on being 1.8 million, even if we got a very, very, very low LVR of only 60%, you can redraw $1.1 million against the income and against the security of that property. Now you've only paid $950,000. The bank will give you 1.1 million. So you've actually got your deposit back. You've also got another $166,000. So that's when Lawrence comes knocking on your door. I come knocking on your door. We say, time to buy another NDIS property and do it again. So we're actually getting all our capital growth in the first year or two once the house is completed and once there's an income that's going into your bank account. And after that, the value of the property is really only going up based on the increase in rent, which is indexed to inflation. So a normal everyday investment property is going to double every 7 to 10 years, and it's based on capital growth, and you're going to have to wait maybe 3 years, 4 years to do your refinance and go and buy another similar property. The good thing about NDIS is we get a huge jump in capital value of the property. We can pull out our deposit, get a bit more, have a holiday, pay some money off your house, tell your wife not to go to work anymore, do whatever you like, but we'd be telling you to buy another one and keep doing it. Alrighty? And that's what's been happening. All right, so people that have bought before COVID have refinanced, bought more property because they've also got another income coming in now, which makes it easier to get finance. They've got a huge amount of equity, which is where we get the deposit from. So their second house is free. Same as anything, the first one's the hardest. So once you've got this NDIS property up and running, which for a lot of people is an enormous leap of faith as well, because when we started this, there wasn't any NDIS houses to go and see, to get the reports from, to show the bank account details, etc., of the money going in. Now there is. Everybody knows about it. NDIS is in the news all the time. People know how much money the government's being spent. So we've got that capital growth to draw upon and the income. It's a lot easier to get the second and third one a year or two down the track when this is up and running. Yeah, the theory's fine, and that's why I like to keep this old presentation just to prove that we have been correct. And that's why I was waffling at the start about how we've been correct as well. And we're not going to stop being correct now. We're right in it, and things are a lot more organized and streamlined than what they ever have been. So yeah, it's a fantastic opportunity this year. Alrighty, guys. Albert, can you just email me as well? Got a few Alberts from the database, so or let me know the email address here in the chat, and I'll send it out to you as well. All right, guys.
I just wanted to chat to you about that land. What happened to that land when you're ready, Joe, please?
Yeah. All right. So, and this is an example for everybody anyway. And what I was saying is, if I'm 1 day too late, 2 days too late, the properties are going to sell. Okay. And that's an example, which is what's happened with good old Matthew here. Maybe I was 1 day too slack in getting the paperwork across to the land agent or the builder. It's never too much of a drama because we've been compensated with a bigger block of land. So it's 50 square meters bigger Matt, it's only 10 grand more. So it's actually a screaming bargain as well. And yeah, somehow they didn't process our expression of interest before somebody else's. But, you know, they've done a special deal with us on this particular land. Now that the builder's back, now that there's, because in December, you know, from the middle of December, basically nothing happens till the middle of January. They're back at work. They've looked at all the paperwork to get going again, and they've seen that that's been sold twice. So apologies for that, but I think it's worked out in our best interest anyway.
Yeah, it should not really. It's just won't be inhibiting anyway, because they've given us that other block, eh?
Yeah. So we don't yell at them too much for any mistakes because we're just making such a fortune out of it anyway. It's a little bit of swings around about, but it's definitely what I was trying to point out to people. You know, while they're dithering and thinking it's all too good to be true, somebody else is buying this and we're missing out on 3 grand, 5 grand, you know, every week that goes by as well. Okie doke. So with your permission, Matt, I'll just tell them to go ahead with lot 14. And I was just having a look at any paperwork that they've sent through to us, but we'll get that because we don't want that to disappear from us again as well.
Okay, cool. Thank you.
All right. About that. Just means we need to do more paperwork all over again. Never mind. Yeah. Alrighty. Any other questions, guys?
That's it for me. Thanks, Joe.
Yeah, just also the offer is that a lot of people don't like to do things online. You know, they like to sit down. We're happy to come out, meet with people. We've got staff in most states as well that can come around, have a chat to you, show you printouts, things like that. You know, there are people's bank statements and stuff that we can't show on the internet. We can't record, so we can show you that as well. And meet you face to face because it is obviously a big commitment to spend a couple of $100,000 on the promise, you know, that you're going to be rich and good looking a year or two from now. So be to do that sort of anytime, day or night. We are working day or night, day and night as well, because this thing is not going to last forever. So we just got to make the most of it while we can. Okie doke. All right, guys. Thanks a lot. Usually takes about an hour or so for the recording to come, and then I can ship it out to whoever would like it.
I can use my 3 phones and 2 computers.
I missed that, Mumbles. Done. All right. Cheers, everyone.
Thanks, yeah, man. Thanks.
Pleasure. See ya.
Thanks.